Hello, everybody. Welcome to the Complete Guide for Return of Premium, or ROP, Term Life Insurance. So first of all, what is term life insurance? Term life insurance is going to be a life insurance policy that does expire, regardless of what agents may have told you. It's a policy that goes for anywhere from 1 year to 30 years, and then that's the end of the term. Now, with term policies, with many of them, you can extend past that term, but your cost is going to go way up, usually about 8 to 20 times what your cost was before. So for most people, it's not financially sustainable to continue that. So that's a term life insurance policy. Now, what is ROP, or what is return of premium when it comes to term? It is the premium, your payment, your monthly payment. At the end of the term, your money is returned to you. So return of premium. Now, these return of premium term policies, they can be anywhere from 75% to 100% return of premium, meaning at the end of that term, let's say it's a 30-year term, which, by the way, is going to be your lowest price. The longer term with return of premium is actually the best price policy. If you go with the shorter term, it costs a lot to go for that shorter term. So for 75% to 100% return of premium product, that's going to mean that at the end of your term, let's say it's 30 years, you get either 75% of all the money you paid into it back, or most policies do 100% ROP. So you get 100% of what you paid in. That money comes back to you at the end of the term. Now, I already talked a little bit about the length of the return of premium terms. Typically, they're going to be 10, 20, or 30 years. Nowadays, companies are getting rid of those 10-year terms altogether. So mainly we're seeing 30-year return of premium terms. There are some 20 years. But typically the rule of thumb is you actually want to have the longest term possible, because that's going to lock in your health. It's going to lock in your price for as long as possible. And most important thing with these policies is to have a long period of time that you're protecting your loved ones with a life insurance policy. So I do always recommend a 30-year return of premium term. And again, your price drops when you have a longer term as well. Now, these return of premium term policies are typically what's called simple issue. Simple issue means there's no medical exam. It's not fully underwritten. It's simple issue. So that just means to you that it's easier to get, easier to qualify. The process is faster. It's not going to take months typically for approval. Usually it's going to take more like a week for approval. That's a lot more common, sometimes 2 weeks. Now, depending upon the amount of coverage, the death benefit that you want, it might be required, even though it's simple issue, it might be required that your agent do a saliva swab. They bring everything, and then they'd hand you a little laboratory grade swab, and you do it yourself, and then they put it in a tube. And that's the test for things like HIV and stuff like that. Now, these policies usually have what are called living benefits built in. What that means is if you're diagnosed with a terminal, critical, chronic condition, sometimes there are other things. Sometimes none of those living benefits are included. It depends upon the company. It depends upon the product from that company. But those living benefits mean if you are diagnosed with one of those categories of conditions, that you either get some or all of the policy pays to you while you're alive. Just a letter from your doctor is typically what's required, and then that living benefit pays. Now, typically cost of these policies, it's going to be more than if it wasn't return of premium. That's just common sense. So if it was just your standard term policy without any return of premium, it's going to cost less. You add on the return of premium aspect of it, your price is going to go up. Sometimes it goes up 50%. Sometimes it goes up, it's twice the cost. So it really just depends upon your age, if you're a smoker, a non-smoker, your health, things like that. Now, because it is a simple issue type policy, typically you have to be in good, anywhere from good to perfect health. So the way that they quantify that is you need to be on 3 or less active prescription medicines, only minor medical conditions. Diabetes is fine as long as there's no insulin. No permanent disability. And for the return of premium option, you can always get traditional term at higher ages, but you have to be under the age of 51. So 50 down to 20, typically the age range for return of premium term policy. Last couple things. When should you choose a return of premium term policy? This isn't for everyone. Return of premium, again, it's going to cost more. It's going to be for people that They have the room in their budget. It's not too expensive to get their return of premium, and you'll know when you talk with your agent. And they like the idea of that check coming back to them in 20 or 30 years. Again, usually 30 years. So as long as you keep that term, you can't cut it out, you can't drop it, can't surrender it early. So hang on to that term. If you're going to do a return of premium, you're committed. So you want to go for the full 20 years, 30 years. Otherwise, you're not going to get your money back. In some cases, you'll still get some money back, even if you surrender it early. But there are some companies out there that you have to keep it the entire time. Otherwise, you don't get any of that money returned to you. So these companies, they have to make money too. They have to make their own profits. So that's how they do that. Now, when should you not choose a return of premium term policy? And it's good to kind of just consider these things because you want to make sure, again, you're committed. So you've got to choose the best option for you. One is if you are on a tight budget, you need the absolute cheapest option, then I would discourage you from getting a return of premium term. In that case, I'd recommend just the leanest traditional term policy based on what you'd qualify for and what you can afford and how much coverage you need, of course. So another situation where you wouldn't want to return a premium term policy is going to be when, for some reason, you want or you need a whole life, a permanent life insurance policy. So that might be, if you're past the age of 50 or 60 and you're looking for getting just the last life insurance policy you'll ever need, well, then you shouldn't be getting a term. You should be getting a whole life insurance policy. And perhaps you don't need as much coverage. And that would be another reason to look at whole life instead, would be if you don't need as much coverage, you may want to consider getting your whole life insurance policy as young as possible. Lock in that amount of coverage. Think about it in terms of lifelong coverage, not for the next 10, 20, 30 years, but until death. So just make sure it's the amount of coverage that you're happy with. It's within budget. And there you go. And Bob's your uncle. Now, last thing, in order to qualify, I already mentioned a few things. You just want to make sure that if you are basically, the younger you are, the more likely you are to do a return of premium term policy. So if you are the ages 20 to 40, you're a lot more likely to do it. The prices are a lot better if you are under the age of 40. Again, you can do it under the age of 50. And if you are still wanting a term, but you are 51 or above, you can actually do traditional term policies, not return of premium, but traditional term policies up to the age of about 85. But they do start to get pretty darn expensive past the age of about 65. And if you're looking for a larger term policy, let's say 300,000, 400, 500,000 or more, then just brace yourself because they get expensive if you want large coverage policies, especially past the age of about 60 or so. So I hope this has been helpful. This is Chad McMahon with Protect with Insurance, signing out. Take care.